Western Digital's shares surged by an impressive 9.3% on January 21st, 2024, marking a notable high point after a wave of analyst upgrades and raised price targets. Among these, Bank of America's adjustment stood out, lifting its price target to $257 per share, a figure that reflects growing confidence in Western Digital's financial trajectory and market positioning. This sharp rally prompts a deeper examination. What exactly triggered this sudden investor enthusiasm, and how are the underlying fiscal estimates influencing sentiment across the market? Welcome back, capital trackers, to the Resource Equation, your go-to source for dissecting the macroeconomic forces shaping resource stocks without the noise and hype. If you're new here, subscribing ensures you stay informed with fact-based analysis of the week's most impactful market developments. Today, we unpack the forces behind Western Digital's recent stock surge, contextualizing it within broader industry trends and financial forecasts. On that day in late January, Western Digital's stock price didn't just inch upward. It leapt, reaching levels unseen since mid-2020. This movement followed a series of analyst upgrades from major firms including Bank of America, JPMorgan Chase, and Morgan Stanley, all of whom revised their outlooks upward. Bank of America's target of $257 per share was particularly bullish, representing a roughly 20% premium over the stock's closing price just a week earlier. These revisions were underpinned by updated fiscal projections that suggested stronger than expected revenue growth, driven by expanding demand for high-capacity storage solutions. Understanding why these upgrades matter requires recognizing the role analysts play in shaping market narratives. When analysts revise price targets upward, they signal a reassessment of a company's fundamentals, whether through improved earnings forecasts, better cost management, or enhanced competitive positioning. In Western Digital's case, these upgrades suggest confidence in its ability to capitalize on surging data storage needs, particularly as cloud computing, artificial intelligence, and 5G technologies drive exponential data generation worldwide. Delving deeper, three key figures illuminate the story. The 9.3% stock price jump, Bank of America's elevated $257 target, and the broadly optimistic fiscal estimates circulating among analysts. This trio reveals a market reacting not just to short-term news, but to a recalibration of Western Digital's long-term growth prospects. The company's latest earnings guidance, released in early January, forecasted a 12% increase in revenue for fiscal 2020, fueled by strong demand for enterprise-grade solid-state drives, SSDs, and emerging applications in AI infrastructure. Beyond the surface, Western Digital's rally reflects wider shifts in the data storage industry. The exponential growth in data creation, estimated by IDC to reach 175 zettabytes globally by 2025, has intensified demand for advanced storage solutions. Western Digital's strategic investments in next-generation NAND Flash technology and its recent partnership with major cloud providers position it well to capture a significant share of this expanding market. Analysts are factoring in these trends, anticipating that Western Digital will benefit from both volume growth and margin expansion. Before this rally, Western Digital's stock had experienced some volatility, influenced by macroeconomic headwinds such as inflationary pressures and supply chain disruptions impacting the semiconductor sector. The data storage market itself faced challenges from fluctuating PC sales and inventory adjustments in 2023. However, the recent upgrades suggest a shift in analyst sentiment, reflecting a belief that these headwinds are easing and that Western Digital's operational resilience is improving, supported by cost optimization initiatives announced in late 2023. The timing of these analyst upgrades aligns with several strategic developments at Western Digital. In December 2023, the company announced plans to increase production capacity at its fabs in Malaysia and Singapore, aiming to meet rising demand for SSDs and high-performance storage components. Additionally, Western Digital's collaboration with AI chip makers to develop specialized storage solutions for machine learning workloads has garnered positive attention, signaling potential new revenue streams beyond traditional storage markets. Market reactions on January 21st were not isolated to Western Digital alone. Other key players in the storage sector, including Seagate Technology and Micron Technology, also saw modest gains, reflecting a sector-wide reassessment. Yet, Western Digital's outsized move suggests that investors are particularly optimistic about its competitive advantages and upcoming product launches such as the recently unveiled UltraStar DC SS540 SSD series, which promises higher durability and speed for data centers. Despite the rally, some uncertainty remains regarding the precise assumptions behind the analyst upgrades. While fiscal estimates point to improved earnings and revenue growth, details about cost structures, capital expenditures, and competitive pressures have not been fully disclosed. This opacity leaves room for debate about how sustainable this momentum is, especially as global economic conditions remain unpredictable and semiconductor supply chains continue to face logistical challenges. What's your perspective on this? Why do you think analysts chose this moment to raise their forecasts so aggressively? Could it be linked to Western Digital's technological innovations, or perhaps broader industry dynamics, such as the shift toward AI-driven data processing? Share your hypotheses in the comments below. Returning to our initial question, the evidence clearly ties Western Digital's 9.3% price jump to the wave of analyst upgrades, with Bank of America's $257 target serving as a prominent catalyst. Positive fiscal outlooks played a critical role in reshaping market expectations, yet the finer details driving these forecasts, such as margin improvements or new product adoption rates, remain to be fully clarified in upcoming earnings disclosures. Looking ahead, investors will be keenly watching Western Digital's next quarterly earnings report, scheduled for release on April 25th, 2024. This report will provide updated figures on revenue, profit margins, and guidance for the remainder of the fiscal year. Market participants will also monitor broader industry indicators, including global NAND Flash pricing trends and supply chain stability, which could materially impact Western Digital's performance. The ripple effects of these analyst upgrades extend beyond Western Digital's shareholders. Suppliers, cloud service providers, and enterprise customers all stand to be affected by shifts in storage technology adoption and pricing. Furthermore, these developments signal broader market confidence in the data storage sector's growth potential, which could influence capital allocation decisions across the tech industry. Pause for a moment and consider the broader implications. While Western Digital's surge is headline-worthy, there's a parallel narrative unfolding with SanDisk, a key competitor and subsidiary of Western Digital, which recently led gains in the S&P 500. This phenomenon ties into a structural shift from AI training workloads, which are compute-intensive, to AI inference tasks that require massive flash memory capacity. This transition is driving unprecedented demand for high-performance storage, underscoring the strategic importance of companies like Western Digital in the AI ecosystem. If this story resonates, you'll want to explore our deep dive into how AI-driven demand is reshaping the flash memory market, available via the link in the description. Understanding these dynamics is critical for anyone tracking technology stocks or the semiconductor supply chain's evolution in the post-pandemic era. Subscribe to the Resource Equation for weekly data-driven insights like this one. Next week, we'll analyze how semiconductor manufacturers are adapting to ongoing geopolitical tensions and supply chain realignments. Until then, stay informed and keep questioning the numbers. A quick reminder: this video reports and explains publicly available information and does not constitute investment advice. Always conduct your own research before making financial decisions.